minutes left until the market will open. Let's set up our charts. Let's go to the daily time frame. Coming to the daily time frame, yesterday we got a closing above. What happened yesterday was really significant in terms of the swing trading long point of view. We got a closing above this 600.03, which has been a reference point for the whole week. So, and we have gotten close above the D2 point, which is the 20-day period moving average. Let's mark the previous day high and the previous day low. As always, we'll mark the previous day high and the low. Let's go to the hourly time frame. On the hourly time frame, I'll mark the 20 period moving average on the hourly through this line. One HMA will be at 601.75, 601.75. We will also adjust the D2 point. We are gapping way above the 600 price, 600.03. Let's come down even lower to the 5 minutes time frame. Yesterday we got a closing above the 20-day period moving 20 period moving average on the 5 minutes, and we will open way above the moving average. So I'll consider that as the first leg opening range gap. All of the gaps will be denoted by this color as always. About 6 minutes left. So now that we have all of the references we need, let's make a bigger context. So we are above, yesterday we got a closing above this white box, which represents the monthly volume imbalance or the monthly opening range gap. We have that price point, we have the previous day high, the previous day low, long-term swing trading point, the hourly 20 moving average, and the 20-day period moving average. So these are the 3 points which bulls are looking at for strength. On the electronic trading hours, let's mark all of the important key levels. So you see this BOP point. BOP point represents this level, which was the breakout point from Thursday. We broke through this point and moved downwards on Friday, so that became the breakout point on Thursday. I've marked this line as the BOP line. We will see these lines on the smaller time frame, 964 and the previous day high on the electronic session, the previous day low on the electronic session. Let's go to the 4 hours. On the 4 hours, we are making somewhat of this sort of a contracting channel and contracting triangle. On 4 hours, it's basically a range, big range. So 9 a.m. candle is the price which is holding the market together, As long as we are below this price point, I am not interested in taking a swing short. Okay, as if, for example, for overall context, bulls, they do not want the price to go below this level, so this will be the breaking point. If somehow bears manage to move below these two white lines, I'll be happy to take a shot, probably filling the whole gap. But as long as we are above this price, I am not interested in taking a swing shot. I might take a scalp shot, but even that is not really a high probability trade. So if I go short, I'll be using a lower lot size than if I go long. If I go long, I can increase the lot size because the market has 60% chance of moving higher than lower. So there's our context and the narrative for today. We have about 1.5 minutes. So on the 4 hours, it's basically a range. Let's look at the hourly time frame. On the hourly time frame, this candle is inefficient at 2 a.m., which is basically wickless. So the price may want to retest this point, which is 100 points below us. So that can be a potential target for a scalp, which is 777. 24,777 is a good target. Considering that we are in a range on the higher time frame, this can be a good target for the scalp. Also, we can target the Asian lows, which is 699. So let's see, 10 seconds. And the market is open. I'll mark this opening with blue gap. I'm waiting for the first 15 minutes to close. Last validation on the 15 minutes was 8:30 candle. Since we are very close to the previous day high, we might even probably will touch this point. I have to always think about whenever we broke out from the previous range, the market collapsed. This happened here, this happened here. The same thing can happen right around this point. Since we are making some sort of a contracting channel, Thursday's breakout point might get retested. On the 1 minute, we got two strong bullish bars first 2 minutes. First 5 minutes closed as a relatively strong bullish bar. Let's see what's going on the 1 minute. Second 5 minutes bar about to close. We bounced off this level, this green point, which is generally a buying zone. It's a minor buy zone. Second bar closed as an inside bar. I have to remember this. 777 is a reasonable target, or this green box 785 is a reasonable target. If this third bar closed below the first bar, I might go short, aiming for 785. Bulls who bought the clothes somewhere around here, they are getting out at their original entry. They might have bought somewhere below or right at the open or the close of Tuesday. Are we getting rejected of the buy zone, minor buy zone again? So now that we have taken out the high and we have taken out the low of the first bar, this is interesting. We do not have a wick of 931 and 932, which makes it a very high probability that market may find this as a magnet. Is this the first leg and the second leg trap, or is this the first leg, second leg, and third leg trap? The range of the first 15 minutes is tight. It's 34 points or 66 points in total. So if I go long, hypothetically, because we have 1 minute left till the first 15 minutes very close. So if I go long, setting my stop loss at 33 points, even if I target the breakout point, it gives me one risk to reward ratio, which is decent given the probability of the market touching the breakout point. I might try a long right here. Let's see. We got a 3-bar micro channel on 1 minute. If I single standard deviation projected upwards of this takes us to this point. So since it was a high probability that the market tested this point, the wickless areas, so I front run this entry. My original entry should have been here once the price closed above the initial range. Once the price closed above the initial range, I might add into my position. It's an extremely good risk to reward ratio with a very high probability. Bulls need to close above the previous day high for a good confirmation. They are, look, the thing is, I'm not really expecting higher targets since we are touching the breakout point and the market's previous behavior has shown whenever the market broke out of some level, it always retests very deep. So that still has the chance of happening. So it has broken out of this prior range. Bulls need to close this 5 minutes bar above the prior day high. It's okay. Should have, could have, and would have, right? Okay, it knocked me out. So yeah, there's that. Broke out, closed above. Since I front run this trade, I should have gotten out at 1 times my risk, because my initial risk was 60 points, and I was getting no, $60 was my risk, and I was getting 90 or $100. So it's gonna bounce again probably. 947 is wickless. To be careful, because it can be arranged. Since we are getting overlapping bars, the first bar was a bullish bar, bearish bar, strong bullish bar, but and then it's a bearish bar. So a lot of overlap. I had to execute since the probability was very high. I was getting 33 points. So it was nice. Got chopped out. Now it's making an impulse downwards. I will try to go short once we close below this entire range. Bears need to close below this entire range, that they are trying to shift the context. The prior day high, they got rejected. So
computers now have primary control of critical vehicle functions.
bears need to close below this 15 minutes range for me to enter a short. Otherwise, the whole narrative will be more biased towards a sideways, because we are getting alternative bars. The first bar was a bearish bar, bullish bar, and then again a bearish bar. So we need 15 more seconds below this range. If that happens and bears succeed doing that, I will try to target 777, because we have a good inefficiency downwards, or the 520 period moving average. Bears bulls try to close above the prior day high, but it failed. So bears came in. You have to be careful trading this ranges because it left an inefficiency right around this point. It was exactly similar to 932 inefficiency. The reason we came back to test this high was this point. And this was also the reason I front run this trade to the upside. So think about it like this. For example, if the market wants to top around for a complete hour, or the hourly candle wants to be a doji bar, like, so I would have to wait for 7 more minutes until this hour close. The next hour may present a trend. So as long as we are inside this range, it's not tradable. We need to close above or below this range. So 1 minute left until the 5 minutes will close. It's most likely it's gonna close as a doji bar. Minute left. So from the point of view of regular trading hours, we are above the moving average, right? So two cases. Either bears want to make an impulse to the moving average. Either we are waiting for the moving average, we are gonna move sideways until the moving average catches up with the price. Then we might expect price to reach back to the Thursday's breakout point, which is still a high probability trade. As we are above this minor buying zone, that's still a high probability trade. Now it all depends on the entry trigger. Wherever the market closes above or below this range, I will try to go long or short. Since I'm scalping, I'm not really generally directionally biased as of now. So 950 closed as a doji bar, but still it closed above its midpoint. So what are we getting? The first bar was a bullish bar, a bearish bar, bullish bar, a bearish bar. Then again, so it's, what is this price action indicating? It's overlapping bars. What is overlapping suggests range. So it's better to stay out until the range sorts itself out. We have 5 minutes until the 30 minutes will close on the Qs or the regular trading hours, and an hourly candle will close on electronic session. So let's assume that this hourly candle wants to close as a doji bar. There's nothing much I can do. See, got this point, this price point, this price point. What is it making? It's making an expanding triangle, somewhat like this. See? Okay, even if it is making an expanding triangle, what is the next projection? Next reasonable target can be the breakout point. Since it's not very far above us, I am also interested in taking a scalp, so I'll be risking about 30 to 33 points to gain 33 points, which is reasonable. 3 minutes till this hourly candle will close. Probably wants to close as a doji bar. So what if the price closes below this point before the hour closes, right? I might take a short, but with being very careful. So I will be lowering my lot size since I'm more biased, generally 60% more biased to the upside. Let's assume it closes below this point. So my risk on this trade will be 33 points. Still will be reasonable to target this blue line, which is the 50% of the prior day. Prior day's range 862. Long or short, both are generally reasonable. The only thing I do not want to do is to fight the range, which can chop you. So I'll repeat the criteria for entry will be a close above on the 1 minute. This is a 1 minute, if you can see it. This is a 1 minute time frame, and this range is of the first 15 minutes. If you draw a range of this 15 minutes, then go to the smaller time frame on a 1 minute. We're getting alternative bars. If this bar closed as a strong bullish bar, it's reasonable to expect the market will retest 935. So bulls who bought the close of this bar, they are disappointed. So when the price will reach this point, they will probably get out. So in this context, who is making money, right? People who are going against the trend are making money. For example, if someone who sold here and sold more higher, they made money, right? Someone who bought the low, they made money. Someone who bought the low again, they made money, right? So it's counter trend. This green box, this is a minor buying zone. It's holding good as of now, but it really doesn't suggest anything other than the price is holding it as of now. Okay, so 10 a.m. the new hourly candle opened, imbalance to the downside 884, so probably will come back. Last candle was a bearish bar. We took out the low of 3 bars prior to it. Bulls who bought the close of the third bar, they got out. So bears are expecting some sort of second leg out of this move. To the moving average. See, bullish bar, bearish bar, bullish bar, bearish bar, bullish bar, alternating bars. So it's would generally in this context I do not like to trade in these areas because it's obviously I'm fighting against the whole context unless and until I'm counter trend trading. So which I'm not interested as of now. If you look at it on the 1 minute, see what it's doing. 1 minute's moving average reached, right? For me to be interested in short The price should at least give me 2 or 3 bars below, complete bars below the 1 minute 20 period moving average. That will increase the probability. Whereas they want a measured move of this range. Measured move of these bars takes us to the 50% of the opening range gap. On 1 minute in the electronic session, see it's choppy. It's completely choppy, so it's better to, whenever the market is in chop, it's better to move to a higher time frame, right? Because a, a range on the higher time frame will be a trend on a smaller time frame. So impulsive moves. So it might make you think that it's going somewhere, but it's not gonna do that. It's gonna be range on a higher time frame. So if I do not get move within the next 15 minutes, I'll just probably leave. Okay. So the hourly candle started right at this point. I'll treat the hourly candle as the start of the day. So it's basically a 70% chance that we will take the low and the high of the first candle of the hour. So, okay, the price is probably starting to move. Within the next 46 seconds, if it stays below the range, I will go short to the 50% of the range. It's reasonable. To be very careful about, since we have targets both higher and lower, the market is making, and also you have to be thinking about this point of view. Whenever the market broke out of any prior breakout range, a deeper retracement. It broke out of this point, a deeper retracement. So if, for example, if it breaks out of this range, what is it likely to do? It's gonna touch this Thursday's breakout point, which is 964, right? Then it's gonna come back. Probably these are different projections, right? These are different contexts I'm thinking about, and can come back to this point. But all in all, if I were to take a swing trade, I would be more interested in taking a long-term higher swing trade long. I'm not interested in taking a short swing trade in shorts, selling it, right? Since we are above this 621, the whole balance of power is with the bulls. Bulls want to stay above this range for swing longs. So if I go short, I'll be just scalping. Okay. So what did I mention about the hourly candle? The hourly candle will be treated as the open of the session. This was the first doji bar. We took out the low and high of the hourly candle. Now the price, if it bulls succeed closing above 931, I have about 10 minutes. If that doesn't happen, I will close the stream. I'll not fight it. I'll not fight the trend. I don't care if it goes 1,000 or 100 points after 2 hours or 3 hours. I don't care. who is making money, right? Bulls who sold, bears who sold above this point, they made money, right? Bulls who bought the low, they made money. Someone, bulls, they got out break even after this impulsive bar. They never got a chance to get out. It right the bulls who bought the close of this bar, it moved impulsively higher right around this point, right? Higher, then it collapsed. So they got out break even. Bulls who bought the close of this bar bought more lower, they made money. Bears are expecting somewhat of a second leg out of this move. We are dragging the moving average higher and higher. So anything can happen. Either the bears will push it to the moving average, then we will continue higher, or either we're gonna move sideways. All in all, bulls are generally in more control. So even if I go short, my lot size will be lower. I have how much time left? It's basically about 7-8 minutes until I leave. The last thing I want to do is fight the range. Okay, see what's going on the 15 minutes. So a strong bullish bar, an outside bar, right? So I mentioned about, if for example, if you are in a ranging condition, it's better to move to a higher time frame for clarity. So impulses on the smallest time frame will be, they'll make you think that it's a trending market on a smaller time frame, making strong impulses higher, higher and lower, but it's not worth taking the trade. So okay, bullish bar and outside bar. Once this 15 minutes closed at 10:50, I will leave. Now we are making this contracting triangle. Contracting triangles are generally breakout mode. So it's gonna contract, contract, contract. Might give out a second leg of this move. To this point, 826. Even if I'm not trading, I can obviously tape read, right? So can be to 700. Why am I targeting 777? Generally speaking, we have a major inefficiency on the hourly candle, this candle. We also have untouched Asian lows. So let's go back. New 5 minutes candle. Let's mark the 15 minutes range on here. The first 3 bars. Price needs to stay below for 30 more seconds. Since we are in a trading range, it can just like within a single candle reach to this point. I won't chase it. It's okay. I've gotten a single bar below the 20 period moving average. What? This is my last try. We are getting the second leg out of this move. A single standard deviation projected from these 4 bars takes us to the 50% of this range. It can easily come back to test this high. I won't be surprised. We have about 2 minutes until this 15 minutes will close. Bears need to stay below this green box. So the people who are trading counter trend, they are buying this low 852. They might buy some more lower. For example, they will buy at the 50% scaling in basically. Is it unreasonable to expect 34 points? Don't think so. And 30 seconds left until this 15 minutes will close. I think it's gonna knock me out. But till last validating candle was this point, which has the high of 869. So as long as even on the 1 minute we stay below this price point, or stay or close below this price point or this price point, the trade is still intact. We got the fourth 15 minutes bar, which, keep this in mind, we have closed above the initial range on 15 minutes. Can I close this trade? I can, but it's better for me to wait until we close above 857, or it can just knock me out in a single candle. Yeah, 10 seconds and I'll close this trade. Okay, okay, okay. It's closed on my brokerage account. This is obviously a demo. So, yeah. Thank you for your time.